Imagine waking up one morning to discover that the United States, the most powerful economy in human history, the issuer of the world's reserve currency, the backbone of global finance, has missed a payment on its debt. Not a default caused by a war or an invasion, not one caused by bankruptcy or poverty, but a default caused by something far more fragile: the collapse of trust. Within minutes, screens would flicker red in trading rooms across the world. Interest rates would shoot upward like a pressure valve bursting. Central bankers would scramble, not to stabilize markets, but to understand what was happening. Because the unthinkable would have occurred. The one promise the world believed could never, ever be broken had broken. If the United States can't pay its debt, the question isn't just what happens to America, it's what happens to everything. For more than a century, the global economy has been built on a quiet assumption that U.S. debt is safe, that U.S. Treasury bonds are the closest thing to truth in a world full of risk. Countries rise and fall, companies appear and disappear, markets boom and collapse. But the American government, the thinking goes, always pays. That simple belief is the invisible glue holding together mortgages, pensions, currencies, trade, and even peace. It is not gold, it is not oil, it is not military might, it is trust. And trust is far more fragile than dollars. To understand how dangerous a U.S. default would be, you have to understand how the United States built the financial architecture we now live inside. The story begins not with computers or Wall Street traders, but with a young nation drowning in war debt. In 1790, the United States was a financial wreck. 13 newly independent states were bankrupt after the Revolutionary War. Soldiers were paid in promises rather than money. Creditors doubted the nation would survive, much less repay anything. Into this chaos stepped Alexander Hamilton. His bold idea was simple and radical. The United States should absorb every debt, federal and state, and pay all of it in full, no matter how long it took. Not because the U.S. had the money. It didn't. But because the young nation needed the one thing money cannot buy: credibility. Hamilton issued bonds backed not by gold, but by the future productivity of the American people. Investors took a risk, and it worked. The value of U.S. debt rose. Foreign capital flowed in. Suddenly, the United States wasn't a fragile experiment, it was a trustworthy borrower. That trust became the seed of American financial supremacy. More than a century later, that seed grew into an empire. In 1944, as World War II neared its end, delegates from 44 nations met in Bretton Woods and made a decision that reshaped the world. They tied their currencies to the U.S. dollar and the dollar to gold. America's currency became the spine of the global system. And why not? The United States controlled 2/3 of the world's gold reserves and half of global industrial output. No other nation came close. For a generation, the world ran on dollars as confidently as it had once run on gold. But empires always reach a moment where promises exceed their backing. And in 1971, that moment arrived. President Richard Nixon announced that the U.S. would no longer convert dollars into gold. The gold standard died, and a new era began, the era of pure credit, where money itself became a kind of promise, grounded not in metal, but in trust. The United States had created something unprecedented, a global standard of debt. Instead of gold, the world now held U.S. Treasury bonds. Treasuries became the safest asset on Earth, not because they were risk-free, but because the world believed the United States would always honor them. Banks held them as collateral. Pension funds relied on them to secure retirements. Nations used them to stabilize currencies. They became the scaffolding beneath global capitalism. Every mortgage, every student loan, every stock valuation, even the price of bread in a supermarket, everything sits atop this foundation. And that foundation assumes one thing: America always pays. But what if it doesn't? Default would not begin with riots or political speeches. It would begin in silence on a server, in a trading terminal, in a line of code that attempts to clear a payment that never arrives. Liquidity would evaporate within hours. The dollar, the anchor of global trade, would begin to fall. Investors would flee to gold, euros, yen, or even cryptocurrencies, not because these assets are safer, but because panic rewards anything that isn't collapsing. Stock markets would crash, not gradually, but instantly. Every company valued using discounted cash flow, a method built on interest rates tied to U.S. Treasuries, would lose its pricing model. No model, no valuation. No valuation, no stability. Interest rates would spike so brutally that borrowing would become impossible for ordinary people. Mortgages, gone. Auto loans, gone. Credit cards, unaffordable. Every part of everyday life that relies on debt, meaning everything, would freeze. Within a week, the U.S. government would be unable to pay soldiers, Social Security recipients, hospitals, contractors, air traffic controllers. Within 2 weeks, supply chains would cease globally. Ships would sit in ports without financing. Factories would halt due to unpaid contracts. Governments around the world would scramble to defend their currencies as trillions of dollars stored in treasuries turned toxic. The collapse wouldn't look like the Great Depression or the 2008 crisis. Those events were earthquakes. This would be a black hole, a singularity. And the most shocking part? It could happen without a single dollar running out. Because a U.S. default is not a money problem, it is a confidence problem. And confidence is the only real asset the United States has ever sold. The danger is not hypothetical. The U.S. has come close before. In 2011, a political showdown over the debt ceiling erased trillions from global markets, even though the U.S. never missed a payment. In 2023, the same political theater caused the same panic. Credit rating agencies downgraded U.S. debt, not because America couldn't pay, but because it showed it might refuse to. Investors began quietly diversifying. Foreign central banks reduced their treasury holdings. Gold purchases surged. The world started hedging against the unthinkable. And now, the stakes are higher than ever. By 2025, U.S. debt exceeded $38 trillion. Interest payments approached $1 trillion a year, more than the U.S. spends on its military. The system is no longer stressed. It is cracking. Not because of mathematics, but because of psychology. The more politicians use the debt ceiling as a bargaining chip, the more investors question the one thing America cannot afford to lose: the perception of reliability. If the world stops believing U.S. debt is sacred, the entire global financial system loses its foundation. Bonds become just another asset. Currencies become just another bet. Markets become just another gamble. Because the truth is, the financial world is held together not by laws or institutions, but by shared belief. Break that belief, and the system collapses. The consequences of a U.S. default would unfold in layers, like a series of detonations. First comes the market collapse. Stocks crash because valuations evaporate. Bonds crash because their benchmark disappears. Derivatives explode because their reference points fail. Next comes the institutional collapse. Pension funds holding trillions in treasuries suddenly face insolvency. Banks lose their safest collateral and can't lend. Insurance companies can't meet obligations. Corporations lose access to credit. Then comes the political collapse. Governments dependent on U.S. economic stability panic. Alliances strain. Nations attempt to decouple from the dollar to survive. Global trade fractures into competing blocs. The geopolitical order built after World War II dissolves. Finally comes the psychological collapse. Trust, once shattered, cannot be reconstructed quickly. Investors who flee the dollar won't return just because Congress passes a bill. Nations that diversify away won't come back because a rating agency says things are stable again. People who lose savings won't forget. A U.S. default would not just break the system, it would end an era. And yet, the irony is unavoidable. The United States built an empire not on conquering land, but on issuing promises the world believed more than any other. American debt became the global North Star, a constant in a universe of volatility. That was the genius of the American system. Infinite debt backed by infinite trust. So long as trust remained, the debt could grow forever. But trust cannot grow forever. It is earned over generations and lost in moments. Every political standoff over the debt ceiling chips away at it. Every warning from rating agencies weakens it. Every hint that the U.S. might choose default, no matter how temporary, erodes it. Empires do not fall when they lose wars. They fall when they lose credibility. Rome didn't collapse because it ran out of silver. It collapsed because it ran out of faith, faith in its currency, its institutions, its future. When Romans no longer believed in Rome, the empire died long before the barbarians arrived. The same is true for America. If the U.S. ever fails to honor its debt, even once, the illusion ends. Because U.S. power isn't built on its military, or its economy, or its technology. It's built on a story the world agreed to believe, that American promises are good as gold. Remove that belief, and the empire dissolves. No invasion, no revolution. Just silence, the silence of a payment that didn't clear, and a world that suddenly realizes the guarantee it trusted for 80 years was never guaranteed at all. If the U.S. cannot pay its debt, the world will learn the most painful truth in economics. Money isn't real. Trust is. And trust cannot be printed. When America defaults on its obligations, it defaults on its legacy, on its history, on the very idea that the system built after World War II was stable, eternal, unshakable. A U.S. default is not a financial event. It is a civilizational event, a rewriting of the world order, a rupture in the story humanity has been telling itself since 1944. And if that day ever comes, it will not feel like the end of a debt crisis. It will feel like the end of an age.